Let's start with a wild thought. What if the money in your bank account wasn't really money, but a piece of technology? And what if that technology was failing? One CEO, Michael Saylor, came to that exact conclusion. And then he made a move that just might go down in history. He bet his public company's entire treasury on a radical alternative. So today, we're going to break down his powerful and, yeah, pretty controversial case for Bitcoin and what he thinks it means for the future of money itself.
So right out of the gate, Saylor doesn't pull any punches. He opens with this incredibly bold claim. He's not talking about Bitcoin like it's another stock or some fleeting tech trend. No, he's framing it as a fundamental upgrade to our oldest technology, money. This one statement is designed to make you stop and completely rethink the whole conversation.
So how does he build this massive case? Well, he keeps it pretty simple, actually. He structures his entire argument around three really deep questions. First, what even is money at its core? Second, what's the fundamental problem with the money we all use today? And finally, what's the engineered solution? This simple framework is going to be our roadmap for this whole explainer.
All right, so let's tackle question number one. Before we can even begin to understand something like Bitcoin, we have to go all the way back to first principles and ask ourselves, what exactly is money?
And this is where Saylor's definition is so important. He wants us to stop thinking about money as just, dollars or coins. He wants us to see it as a technology. And its core job? To store economic energy. That's your time, your work, your ideas, and to act as a fair and honest ledger for everything we trade with each other.
Humanity has spent literally thousands of years trying to perfect this one technology. We've tried everything, from seashells and pretty beads to giant stone discs. Yeah, really. Then we moved on to gold, then paper that represented the gold, and finally we landed on the digital government currencies we use today. But as we're about to see, every single one of these systems had a critical, fatal flaw.
This story is just a perfect illustration of what Saylor calls weak money. In parts of Africa, these beautiful, rare glass beads were a form of currency. They were hard to make, so they held value. But when Europeans arrived, they saw this and used their industrial tech to just mass-produce identical beads. They flooded the continent with what was basically counterfeit money and used it to drain Africa of its real wealth, its land, its resources, its labor.
And it's not a one-off thing, right? We see the exact same pattern on the island of Yap. Their money was these giant, hand-carved stone discs that were incredibly hard to move. But when outsiders figured out how to quarry and ship these stones easily, the local monetary system just collapsed. The islanders lost everything. The lesson from history is just brutal. Whoever can create the money the cheapest wins. And holders of weak money, they always lose. Which kind of makes you ask, how strong is our money?
And that leads us right into our second big question. What is the problem with our money today? Well, according to Saylor, it suffers from the exact same vulnerability. It's just hidden in a more sophisticated form. He calls it the silent thief, inflation.
Now, most of us, when we hear inflation, we just think, oh, prices are going up. But Saylor argues that's just a symptom. The real disease is the constant expansion of the money supply itself. As more and more dollars are created out of thin air, the value of every single dollar you've worked hard for and saved, it goes down. It's your economic energy, your savings, silently leaking away like water from a cracked bucket.
And this right here is such a critical insight. The government might report the official inflation number, the CPI, at a pretty manageable 3 or 4%. But Saylor says the real inflation is happening in the very assets you need to buy to get ahead in life. I mean, look at this. While your groceries might be up a few percent, the price of a house or stocks has been inflating at 15, 20, even 25% a year. All that newly created money has to go somewhere, and it's flooding into scarce assets, pushing them further and further out of your reach.
And if you want to see the extreme version of this, where the leaking becomes a catastrophic flood, well, look at places like Venezuela. Their currency has collapsed, losing 99% of its value in a single year. This isn't some ancient history lesson, it's happening right now.
So, why? Why does this keep happening century after century? Well, the incentive is just too powerful. For any government, from the Roman emperors who shaved little bits of metal off their coins to modern central banks today, it is always easier to just create new money than it is to raise taxes. It works like a hidden tax, one that quietly steals the value from the savings of every single citizen.
To really drive this point home, Saylor uses this visceral analogy. He says, look, if the oxygen were slowly being sucked out of the room you're in, you wouldn't sit around and debate the exact rate of oxygen depletion. You'd grab the oxygen mask.
The leaking value of your money, that's the disappearing oxygen.
And that brings us finally to the third and final question. What is the oxygen mask? For Saylor, the answer is an engineered solution, designed from the ground up to solve this ancient problem of weak money. And that solution is called Bitcoin. So what makes Bitcoin the proposed solution? Saylor points to its core engineered properties. First, its supply is absolutely mathematically fixed at 21 million. That solves the problem of endless creation right there. It's decentralized, which means no single person or government can control it or corrupt it. It's digital, making it totally weightless and borderless. And its ledger is secured by a global network using real-world energy, making it virtually impossible to change.
And when you actually compare it side by side with the alternatives, his argument really starts to crystallize. Fiat currency, like the dollar, obviously fails on the supply limit. Gold is pretty good, but we can always mine more of it, and it's a real pain to move around. Saylor argues that Bitcoin offers the best of all worlds. You get the absolute scarcity of something like a Picasso, combined with the ability to zap it anywhere in the world at the speed of light. And look at that last row, seizure resistance. Because you can hold it yourself with a private key, it's way harder for any authority to confiscate than gold in a vault or money in a bank.
Saylor often uses this great analogy of digital steel. Think about it. To build a skyscraper that's going to last for centuries, you use steel because it stores structural integrity without decaying. He argues Bitcoin was engineered to do the exact same thing, but for economic energy. It's designed to be a perfect container for value that doesn't leak over time or across space.
Now, look, this is a fascinating theory. It's a great intellectual argument. But for Michael Saylor, this wasn't just some idea. As the CEO of a public company, he was facing a very real problem that forced him to put his money, or rather, his company's money, where his mouth was. This is the MicroStrategy story.
Okay, so picture this. It's 2020, and Saylor's company, MicroStrategy, is sitting on a $500 million cash reserve. And to him, this wasn't a safe asset at all. To him, it was a giant melting ice cube.
He did the math, and he calculated that because of that real rate of asset inflation we talked about earlier, that cash was losing nearly 20% of its purchasing power every single year. His company was working its tail off just to stay in the same place. They were essentially burning through $100 million a year just by holding dollars. So he made a decision that absolutely stunned Wall Street. He decided to swap the melting ice cube for what he called digital steel. He took $425 million of that cash and converted it into Bitcoin, officially making it the company's primary treasury reserve asset.
And the result was explosive. That initial investment, along with other purchases they made, grew to be worth over $7.5 billion at its peak. This strategy didn't just protect their treasury from inflation. It fundamentally transformed the entire company's balance sheet.
When you really boil it all down, the strategy was brutally simple. He identified cash as a broken, depreciating asset. He then used his public company as a vehicle to swap that failing asset for one he believed was engineered to appreciate, a strong asset to replace a weak one.
And that brings us to the final, critical question that hangs over all of this. Is Michael Saylor a visionary who has shown every corporation on Earth a way to escape the melting ice cube of fiat currency? Or has he taken one of the single biggest financial gambles in modern history? Well, that's the multi-billion-dollar question that the market is still trying to decide.